It's time to do business again. Welcome to the Friday edition of Business Incorporated. Here's what we have prepared for you. The Democratic Republic of Congo is introducing $50 visa requirement for citizens of Zimbabwe. And it's stagnant growth for Zimbabwe's manufacturing sector. Ethiopia has earned $4.5 billion in exports in 8 months. Welcome to the program. I'm Ini John Mekwa. Let's do business. Starting as usual from the global space, oil prices. We're heading towards the lowest close since the midst of coronavirus pandemic in 2021. That's where we're heading to today, Friday. And of course, it's being hit by the United States President Donald Trump's barrage of new tariffs and output increases that announced by OPEC Plus producer group. Brent lost $2.29. That's more than 3%. So this morning we had it at $69 for now. It's gone down to $67.85 a barrel. Not good for major crude exporting countries like Nigeria. WTI is down. In the morning, it still managed to stay in the green, but for this afternoon, it's been caught up with that. Lost 3.5% to $64.63 a barrel. And then you also see that there's a slimming out of the difference between, so it's normally about $4, at least $4, but I don't think that's up to $4 at this time. Both benchmarks are on course for their biggest weekly losses in percentage terms for half a year. While the tariff announcement by President Trump had hurt crude oil prices, the impact was more severe elsewhere. Investors are scrambling to safety of bonds, and the Japanese yen and gold, as well as news, sent shockwaves through global financial markets. Markets are bleeding, and the dollar index, which measures the U.S. currency against 6 other currencies, it fell to 102.98. So even the U.S. is feeling it at this time. That's the lowest since mid-October. Imports of oil, gas, and refined products are not part of this tariff, but the policies could stoke inflation and slow economic growth and then intensify trade disputes. And of course, that will affect price, which is what we are seeing already. And still around that, oil prices fell on Friday as investors reassess their risk outlook in the wake of those tariffs from President Trump. And of course, it spreads to the metal space. So we see it's all red. Markets are red, and so spot gold is down 0.5%. Getting close to that end of 3,000. 3,097 is what we have now. U.S. gold is down also, still retaining 3,100 level. Spot silver also down $31.56. Palladium in the red also 0.6% at $946.40. Palladium also lost 0.8%, $920.75. In the previous session, gold had dropped more than 2% as a broader market sell-off sparked by those tariffs. Federal Reserve officials are seeking more detail on Trump's trade plans. We hear he's open to negotiations that perhaps there'll be soft landing for some countries, and that could give investors some reprieve. But for now, it seems really hot, and investors are looking for hedge. We come to Nigeria now. The economy recorded a 20.62% rise in foreign exchange inflow in the fourth quarter of last year, and that's according to the latest central bank economic report. The country and the CBN reveals that the total foreign exchange inflow soared to $27.81 billion within the period. That's up from $23.06 billion recorded in the preceding quarter. According to CBN, the increase is attributed to substantial contribution of autonomous sources. Their inflows jumped by 47.55% to $16.27 billion compared to $11.03 billion in the third quarter. However, in contrast to this increase, foreign exchange inflow through the CBN declined by 4.05% to $11.59 billion against the $12.03 billion level that it recorded in the previous quarter in 2024. The International Monetary Fund has indicated its support for the Single Window Trade Project, an initiative poised to streamline trade, increase revenue, and propel the country to the fore of African economies. The IMF's intention of support was indicated during a meeting between the Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edun, and the delegation from the IMF Fiscal Affairs Department, led by Technical Assistance Advisor for Revenue Administration, Mr. Marco Antonio. The meeting highlights the IMF's strong support for the Single Window Trade Project, which is aimed at streamlining trade processes, increase government revenue, and enhance the ease of doing business. Mr. Antonio praised the project, among other reforms, and inquires about how the IMF could provide further assistance for its successful implementation. On his part, Mr. Edun affirms that the project is well underway with secured approvals, a structured implementation plan, and a dedicated team already in place. The Federal Inland Revenue Service, the FIRS, and the Nigerian Governors Forum, the NGF, have intensified efforts to enhance tax administration, optimize revenue generation, and drive sustainable economic policies among the states in the country. According to the Special Advisor on Communications and Advocacy, Collins Omokaro, the partnership between FIRS and NGF focuses on policy harmonization, capacity building, and improved coordination to foster an investment-friendly environment. This renewed collaboration underscores the critical role of subnational governments in achieving financial autonomy and economic resilience. Mr. Mokaro explains that a well-structured revenue system at the state level is essential to reduce over-reliance on federal allocations and strengthening internally generated revenue. As part of efforts to address the challenge of brain drain and dwindling revenue in the country's healthcare industry, the Medical and Dental Council of Nigeria says it has taken some measures that will help to revive the sector. According to the Chief Executive Officer of the MDCN, Dr. Fatima Kiari, was a guest on Business Morning. A key part of this measure includes the strategic expansion of medical schools in the country, as well as collaboration with international finance and medical institutions.
Our first strategy at MDCN is expansion of medical schools. Why do I say expansion? In terms of numbers, when you look at the numbers we have produced in the last year, our output is about 5,500 of medical doctors. And you compare with the number in 2024 of those that have exited, it's about 4,000. So we have a net of just 1,000 in 2024 in terms of output, new output and exit. Currently, we have about 116,000 doctors on the register. Of course, we have, not all of them are in Nigeria. We have an exit register as well. Some are deceased, so we don't count them, and some have exited the register. We're also doing advocacy, so we are talking to World Bank in terms of the projects that we're going to do so that they can support this program of expansion. And we will continue to ensure that the quality is maintained, the high standards of training is maintained, but the output is increased.
Well, that was a conversation we had earlier today. And now we move to artificial intelligence. Considering the projected 27.08% growth in Nigeria's AI market between 2025 and 2030, that's supposed to lead to an estimated market volume of $4.64 billion by 2030. How can this expansion be, well, be more effective in the daily life and tasks of Nigerians? That's what we want to talk about. And we're doing that with the data analyst, Ibironke Adegoke. Ibironke, good afternoon and welcome to the program.
Good afternoon. It's good to be here.
Great. So we see this projection we love the money, 4.64 billion by 2030, but obviously that's going to remain just a thought or an intention if we do not have practical steps talking about the AI industry growth and adoption in Nigeria. From your perspective and the data that you have, how much adoption or how are we doing with adoption of AI into our daily tasks in the country?
So I would say that for regulated sectors like finance, AI will enhance fraud detection. It will automate customer service and it will improve financial inclusion. The healthcare sector as well is regulated, and AI-powered diagnostics and telemedicine will improve access to quality healthcare. In agriculture, there will be precision farming, and AI-driven analytics will boost productivity and food security. So AI will create new job opportunities while automating routine tasks. And to maximize these benefits, Nigeria must invest in digital infrastructure, workforce training, and AI governance. This growth has the potential to position Nigeria as a leader in Africa's digital economy. There will be limitations like weak digital infrastructure in rural areas. There might be slow adoption. There will be skills shortages in AI tech fields that could hamper the local development. There could be lack of clear regulations that could delay responsible deployment. There would be high costs, which may exclude small businesses and startups. Thank you.
So data that you shared earlier with me shows that about 81% of Nigerians believe that AI will change the economy. 87 feel that AI's potential benefits outweigh the risks. And then there's also somewhere in the mind of some individuals of the fear that AI might take over their jobs. How do you balance all of these three factors?
So with 81% believing AI will transform the economy and 87% seeing its benefits outweighing risk, optimism is driven by economic growth. So AI is boosting jobs, yes, business efficiency and entrepreneurship. There will be better services. AI enhances banking, healthcare, customer experiences. There will be rising digital adoption where more Nigerians are engaging with AI-driven apps and services. And to sustain this momentum, Nigeria must invest in digital infrastructure and workforce training. There will be limitations like low digital literacy, where many Nigerians may not fully understand how AI works, leading to unrealistic expectations or misuse, and there would be access inequality. And optimism may be concentrated in urban, educated populations, while rural areas face limited access to AI-driven tools. Thank you.
So if I'm not mistaken, you've mentioned digital infrastructure at least twice since we started this conversation. Obviously, that is at the core of it. But when you look at our reality, internet penetration, the infrastructure and all of that, how hopeful are you that we will hit this target in 2030?
Okay, so AI is transforming various industries by improving efficiency, accessibility, and decision-making. There are some real-world applications like in the healthcare sector. So AI-powered diagnostics, such as machine learning models detecting diseases like malaria and tuberculosis from medical images, are improving early detection and treatment. These all go to the digital-driven methods. So in agriculture, AI-driven precision farming tools analyze weather patterns, soil conditions, and crop health to help farmers optimize yields and reduce waste. So all of this work in the digital sector. Thank you.
Okay, so we have policies like from NITSDA, the National Information Technology Development Agency. We see efforts from that aspect trying to push this adoption and deal with the infrastructural gap and all of that. How would you score, what they're doing so far?
So the National Artificial Intelligence Policy will serve as a blueprint for AI development and adoption in Nigeria. Its key impacts will include regulation and ethics. So establishing guidelines for responsible AI use, data privacy and fairness, innovation and investment where we have driving AI research, startup growth and public-private partnerships. We have digital infrastructure where this will strengthen Nigeria's AI already infrastructure for widespread adoption. So a well-implemented NAIP will position Nigeria as a leader in AI-driven innovation and economic growth across Africa. Thank you.
Right, thank you so much for that, Ibironke Adegoke, data analyst, for sharing your views and findings with us on AI in Nigeria, AI adoption in Nigeria. Thank you.
Thank you very much. Thank you for having me.
Let's take a break now. When we come back, of course, we have the other African stories awaiting you, as well as the markets, to stay with us. Welcome back to watching Business Incorporated right here on Channels Television. Well, just before we head to the markets, let's see what's happening in other parts of the continent. The Democratic Republic of Congo has introduced a $50 visa requirement for Zimbabwean citizens, and that ends the previous visa-free travel arrangement between the two nations. Zimbabwe was among the few countries whose citizens could enter the DRC without a visa, but the new policy now requires travelers to obtain a visa before entering. The reasons behind the policy shift have not been officially disclosed by Congolese authorities. The development is expected to take effect on business travelers, tourists, and cross-border traders who frequently travel between the two countries. Zimbabwe and the DRC have maintained close diplomatic and economic ties, with Zimbabwean businesses having interests in sectors such as mining and agriculture in the DRC. And talking about Zimbabwe, manufacturers in Zimbabwe experienced stagnant growth during the fourth quarter of 2024 as the perception towards the business climate continued to remain negative. According to the Zimbabwe National Statistics Agency's data, manufacturing and mining sectors business tendencies survey for the fourth quarter of the 2024, the manufacturing confidence index decreased to -4.6 during the period under review from 2.1 in the third quarter of 2024. The manufacturing sector's purchasing managers index, that's a PMI, during the period was 35.9, reflecting a 0.9-point increase from the third quarter value of 35. Still in Zimbabwe, the government there is facing significant challenges in settling outstanding payment to infrastructure contractors, which have ballooned to an estimated $1.2 billion. Speaking in Parliament on Wednesday, Finance Minister says that the payment delays to members of Parliament was attributed to cash constraints. The delays are having a tangible impact on public infrastructure projects, including critical road construction, leading to stalled progress. According to reports, Masimba Holdings, which is a major government contractor, recently highlighted the liquidity challenges hindering project execution despite a strong order book. And the Zimbabwe Revenue Authority has uncovered $1.92 billion Zimbabwean dollar, as well as $592.2 million US dollars in unpaid taxes following rigorous audits and investigations that sheds light on the extent to which firms have struggled to pay their obligations under a deteriorating landscape. Analysts say some of the outstanding taxes are related to tax evasion. Zimra's report for the second half ended December 31, 2024, said the authority was owed $2.4 billion ZiG gold this time, and $744 million in unpaid taxes by public and private entities. Most of the taxes have accrued as companies have struggled to balance between a demanding taxation regime, one of the world's highest, and keeping companies afloat. Reports say many firms have moved into the informal sector to escape Zimbabwe's heavy-handed approach on defaulters, even as companies endure a tough liquidity crunch that has ended with bankruptcy. Zimra said that of a total debt, domestic unpaid taxes stood at about 1.8 billion Z gold during the review period. In US dollar terms, a further $674.96 million was outstanding. Outstanding trade taxes amounted to 556.41 million Z gold and 69.04 million in dollars, US dollars. We move to Kenya now, where banking on the African Growth and Opportunity Act, that's AGOA. Banking on that framework, Kenya hopes to maintain tariff-free access to the U.S. market as it seeks a waiver on the newly imposed 10% reciprocal tariff on goods to the U.S. Foreign Affairs Principal Secretary says that Kenya could still export tariff-free to the U.S. until September 30, when the current AGOA framework lapses. He also has promised to negotiate a waiver. President Donald Trump's administration announced a 10% baseline tariff on all U.S. imports from 185 countries, alongside higher duties on some of America's top trading partners. Ethiopia has earned a record $4.5 billion in export revenue during the first 8 months of the current fiscal year. And that's the country's Ministry of Trade and Regional Integration made this revelation. Well, the Trade and Regional Integration Minister in a briefing said that amid strong performance in major agricultural export commodities, the East African country has generated $4.5 billion from the export of goods during the first 8 months of the 2024-2025 Ethiopian fiscal year, which started in July 8, 2024. The ministers attributed the surge in the country's export earnings to significant results in export diversification and competitiveness. It says that various measures carried out in export productivity, implementation of the macroeconomic reform policy, and free floating of the exchange rate system have enabled significant improvement in the export sector. All right, now let's head to the markets and see what's happening today. About 48 hours or so, or less, after that tariff announcement by President Donald Trump. Anita, good afternoon. And what's happening? I smell blood.
Well, Ini, you smell blood, but it's not the blood of animals or human beings.
It's investors' money.
Exactly, investors' money. And also, when you talk about investors' money, I have it here on paper that more than $200 billion was lost in just one single day from top 500 billionaires. I don't know if maybe Nigerian billionaires are among that, but that's the impact of the trade.
Well, I hear that our Eurobond is not looking so attractive anymore.
Not
the
at all.
Fear of uncertainty after all of this has driven some of our investors away also.
Yeah, or you might call it a flight to safety. Everybody's looking for safety.
Where is safety, though? Because even gold was bleeding this afternoon.
Currencies are bleeding,
exactly.
Stock markets are bleeding, commodities are bleeding.
Fixed income markets are also bleeding.
Exactly.
Thanks to President Trump.
No thanks to okay. All right, let's talk about the intraday market numbers. The red that you see here, first starting from Nigeria, where we always start, take our launch pad. 0.08% intraday loss. Yesterday, we saw the 0.02% decline on the market, but the 105,000 level still remains almost the same. So it's just a tiptoe backwards for the Nigerian stock market, which at the moment is not feeling the impact of the trade tariff war, you might call it that, because that's what it's turning out to be. But so far, the market has retreated by about this margin at intraday numbers, and year-to-date is still reducing, no thanks to the impact of profit taking. But we'll talk more about the domestic market when we have our analysts to speak on that. But take a look at the Johannesburg Stock Exchange All-Share Index, another massive pullback. Yesterday we saw more than 4%, about 4.25% pullback for intraday market numbers. And guess what? This is how it has reduced all the way from 90,000 to 83,000, barely, well, just a shy away from that 84,000 level, which we saw yesterday. but then the market has made that pullback and in the red, bloody red for the stock market of Johannesburg Stock Exchange in South Africa. Let's take a look at the other markets. It's still a bloody day, bloody day. Yesterday we talked about the Nairobi Stock Exchange. You know, so they're still trying to be in the green, but when it opened, it closed Thursday in the red, as you can see here, 0.19%. But guess what? It was able to enter the 104 level. And for the Egyptian Stock Exchange All Share Index, the AGX is for Thursday's intraday market numbers, 1.02% pullback, as you can see on above there. And these are because all of them are responding to the Donald Trump tariff, as well as the reciprocal or retaliatory tariff from other countries, both on the side of the U.S., against the U.S., or maybe a little bit in difference with the U.S. Now let's talk about the Middle East market before we get to what the countermeasures are being announced. This is the intraday market numbers for the markets around the Middle East. No market is spared. If you take a look at the Abu Dhabi here, 0.4 down, and for the Dubai index down by almost 1%. That's the last track that we had at intraday. And for the other two markets here, this green, do not be deceived. This is as at last week Thursday, so the market is still reveling in that the Muslim holiday which we had earlier in the year, but earlier in the week. And then so far, market is still in the red. We had other reports or other news that are very, very critical to the Middle East. Well, actually, good news, but not time wouldn't permit us to talk about that. But instead of that, let's talk about the domestic equities market, where we have. Well, let's analyze some latest developments and take a look at what to expect in the second quarter in the coming week, and as well as Friday's intraday market movement. And we have Abiodun Adedotun, equity trader with First Securities Brokers, to give us details about that. Thank you for joining us, Abiodun.
You're welcome, Victor. Good to be here again.
Okay, so now the last time I saw you was in the month of March. Now we're in April. Now tell us, what are the latest developments? I know that the VFD released some earnings, as well as some other companies. Now give us the latest developments on the domestic bourse.
Yeah, of course, the market is very, very quiet right now. Nothing is happening. The market is a bit immune to what is happening in the global space, and this is not so this is rather expected, because for a very long time the Nigerian market has been trading on its own terms, and because we know the issues, the lingering issues with FX for a very long time, or the issues appear to have reduced right now. So it will take a bit of time for us to be able to get a kind of foreign inflow that will be able to give our market that kind of degree of elasticity alongside with global markets. Notwithstanding, we've seen quite a number of earnings released by companies for the full year. And of course, we already got guidance about most of them, what they were going to do in January. The submissions were made by January 31st by most of these listed companies. Not so surprising, the numbers still remain as solid as they were. 2024 was a good year, especially for the banks. A bit not so good for the consumer goods. And the story about telcos, of course, is well documented already. In terms of VFD, of course, the market is currently in the green zone. The company is issuing a bonus share of 1 for every 5. I think last year they did 1 for 4. Investors are trying to take advantage of this opportunity to be able to get into the bonus frenzy with VFD. Otherwise, there might not be so much, talking points about the financials. I think every investor right now is looking at Q1 numbers, and more importantly, the direction of, the economy in terms of inflation, the GDP, employment numbers, and quite a number of data to be released by the Bureau of Statistics.
Okay, yeah, Abiodun, I know that you're quite familiar with this tariff, which has dominated both the week. It started with the but mostly intense within the last 2 weeks. And we've seen the impact on Nigeria's Eurobond, which the yields have surged to an all-year high of about 9.62%. Nigeria's Eurobond has tumbled. But so far, how is this, what effect is this going to have on the domestic stock market in the short to medium term?
Because the Eurobond, you know, it's the security created by offshores. As you mentioned earlier, there's a capital flight to safety right now, and you continue to expect that, you know, portfolio investors around the world will begin to like, okay, maybe this is the time to book in profits, you know, you don't really know the direction and things like that. But for the local market, it's not been the same thing, because the FPI participation like 6, 7, 8 years ago used to be about 60–70%. That's foreign participation. But right now it's less than maybe 25 or thereabout. So locals are the ones dominating. And of course, as long as you continue to have pension funds, asset managers, and of course, notable, you know, few billionaires come to do their stuff in the market, you understand, you continue to expect Nigerian market to continue to hold its own and continue to remain a bit immune to this galloping you're seeing in other markets.
Okay, so now let's move a little bit away from the tariff and talk about the domestic market more elaborately. Within the next couple of months from now, we will be having some festivities. Easter is almost around the corner. We'll be having another Eid al-Kabir, that's a Muslim holiday, as well as some holiday in June. So what sector do you think investors can key in to make more money from maybe like seasonal stocks on the NGX?
Okay, you know, the thing that is, what I'll tell anyone any day is that, you know, the banks don't hold any prisoner. They know how to make money, you know, in Nigeria. The banking industry remains the top notch, you know. You just have to continue to have some exposure in the banks. The bank will continue to do well. The Fugas, as you know them to be. We also have interesting one, you know, Fidelity, FCMB, and a few, you know, there are names that could be worth looking at. Also, you want to consider the oil and gas, you know, what's happened in the Renaissance space with Aradel. You also have the Seplat Mobile consolidation that has just been done. I believe the market is going to begin to see how big, you know, a merger that is, starting from Q1. So in the medium term, the banks, then you should always also have these oil and gas producers. Maybe Nigerian breweries is also worth paying attention to now, you know, given the fact that the reason why they've been underwater is appear to have disappeared. I think there's been a guidance on that, but pretty much I think where you'll be able to see the good alpha remains in financial services.
Okay, so now let's have the final question and answer with you. It's intraday. Can you give us an overview and your expectation for the intraday market numbers and for the close for Friday's trading session?
Okay, currently I think I'm looking at my screen. The performance is just -1. It's been hovering about -2, +2, you know, pretty much. We don't expect to see any big movers among the big caps, you know, the elephants of the markets, you know, your Dangote Cement, your Geregu, your MTN or something like that. It looks like institutions are a bit quiet today. So what we are seeing more is more like retail play, and I don't expect it to really change much. I think the market will just close not too far from this level. The market is on a quiet mode right now. Everybody is watching what's happening in the global space.
I'm sure they're really watching with bated breath, and uncertainty is the watchword. Even the IMF is giving a cautionary on the impact that this tariff could have on the global economy in a very not too distant future. Thank you so much for your time on the show, and wishing you a nice weekend rest.
You're welcome.
As Abiodun Adedotun, equity trader with First Securities Brokers, formerly known as FDN Quest. Now, I was telling you about earlier, the countermeasures that has been announced by some of US's, some of them were their allies. I don't know how the relationship is going to be now, and some were not. Now, we'll start first with the European Union. The European Union President, EU Commission President Ursula von der Leyen, if we can have that, Ursula, that's for the European Union first. She says that the bloc is preparing further countermeasures in order to protect interests and businesses if negotiations with the United States fails to come into fruition. And this is coming just after that sweeping tariff that U.S. President Donald Trump announced on Wednesday, which has caused more like a riveting, a reverberation across the markets across the world, across the sectors, everywhere. Now, second is Prime Minister Mark Carney, who was just came just barely about 2 weeks ago, just when this tariff talks had begun to gain momentum. So he's announcing a 25% levies on U.S. cars imports, most of the cars that are being imported from the U.S. into Canada. So that's more like a retaliatory tariff on the world's biggest economy. And the second biggest economy has also announced a retaliatory tariff of about 34%. That came in breaking just a couple of minutes ago. So they're responding with so much intensity on all goods imported from the U.S. into China. So that is more like escalating the global trade war, or we might call it a tariff war, but it might end up to be a global trade war. Now, for the other two countries, we actually have about 7 of them. Australia says, well, we're just going to negotiate with the U.S. in order to remove tariffs, but they're not seeking to engage in a dispute resolution mechanism. So that's on the part of Australia. South Korea, which currently has impeached the former president. And look, the acting president says he's ordered an emergency support measures for that will not affect businesses. That's in response to Donald Trump's tariff announcement. So that is just for South Korea. So they're taking it lightly. They don't want to go so much aggressive because they know it just might come in against their favor. Now for Mexico, Mexico says it will not pursue a tit-for-tat response against the U.S., but it will pursue a comprehensive program, whatever that means to them. So, but we'll get to see how that happens in the course of the weeks and months. And finally, for Israel, Israel's finance ministry says it will formulate a plan that will protect businesses within Israel. Israel is a close ally of the U.S. in terms of issues relating to the Middle East. Donald Trump is also friends with the Israeli government, but that did not spare the country from receiving a tariff threat or tariff imposition by U.S. President Donald Trump. Okay, so now out of this, we go to the U.S., which has been the cynosure of all eyes. The U.S. markets, starting with the Dow Jones Industrial Average, we have it just breaking there that the Dow Jones Industrial Average has tanked about 1,400 points, responding to that tariff announcement by China of a 34% retaliatory tariff. So all the way from what we saw earlier before, that's for the Dow Jones futures, it was like this before, but the numbers were coming much, much higher. As of yesterday, most of the markets were down by about 5%, some were down by about 4%, but for the Dow Jones Industrial Average, which had crossed into the 40,000 level, it has retreated. The S&P 500 as well as the NASDAQ, this is for the industrial heavies, while this is for the tech, the tech companies such as the Amazons, the Facebooks, the Apples. Speaking of Apple, Apple is one of them that's been hit. As well as the S&P 500, that's the top 500 companies listed on the U.S. So it's more like a tanking, a more than 2% tanking for the futures opening ahead of the opening bell, which is for 2:30 Nigerian time. So, but later today, what will the market will be expecting that there would be that jobs report, which is supposed to point to how the U.S. economy is in terms of jobs creation. That's for the month of March. But then later we'd also get to see how the impact of this tariff announcement affects the world's biggest economy when the April jobs data will be out. But right now the market is looking out for the March jobs data. But for an overview of what happened on Wall Street for Wednesday, let's bring in our Washington correspondent, Mary Bird.
market cratered on Thursday after President Trump's announcement of tariffs. It definitely put the stock market in a shock. The global economy is also showing some signs of major sell-offs. The U.S. stock market had major sell-offs on Thursday as well, as the Dow Jones had its fifth largest losing day in history, closing at 4% down. The S&P 500 closed at 5% down, and the heavy tech Nasdaq led the way, closing at 6% down. As a major day of sell-offs, investors are watching to see how these tariffs will have an impact on the U.S. economy, and specifically the stock market over the next few days. Only time will tell if the stock market can recover in the next few days or weeks ahead.
Our Washington correspondent Maria Bird giving us an overview of Wall Street closing performance for Thursday, which was not too good, well, according to her analysis. Okay, so Ini, that's it for the market. I don't know if you're concerned about the global economy because projections have it that the U.S., there's a 60% chance that the U.S. will fall into recession this year.
Well, I'm sure President Donald Trump knows this. He's heard of this expectations and projections, and he has a plan. So let's worry about Nigeria.
Nigeria, well, well, let's be optimistic. I wouldn't say much about Nigeria.
All right, thank you so much.
Pleasure.
Well, it's still tariff there, just over a day after that announcement by President Donald Trump. And we've seen what the EU, too, is planning to do, or they haven't shared the details yet. But let's hop to Germany now, find out perhaps we can get closer information on what's going on there. Reaction to the tariff with Lars Holzer. Lars, good to have you back. It's just about a day. What's the mood? What are the conversations? We haven't heard details of how the EU will be responding to this.
Yes, that's a big question, and thanks for having me, Ine. It's good indeed to be back with you. And it's interesting here, just like across the entire globe, like we've heard in your other reports here, the tariffs are still the #1, and I want to say the only topic that is really interesting here for markets, with reactions coming in, of course, when I'm looking specifically at the EU or Germany, from corporate executives, from political leaders. And well, you said it right, the EU hasn't given out any details yet. We know that Brussels has prepared something. Germany's economic secretary Robert Habeck was showing off a huge stack of papers yesterday, printed double-sided in small font, and he's saying this is the EU's list of reciprocal measures. However, we were not told what they are exactly. As a reminder, now the EU has been hit, of course, with a 20% levy, 25% on cars. And talking about cars and some corporate reactions, Volkswagen, for example, has immediately now halted ships and trains carrying cars into the US. That's ships, of course, leaving German ports to deliver cars, but it's also cars and parts manufactured in Mexico that have so far been shipped by train across the US southern border. There's obviously a whole lot of companies that have yet to figure out how to react. However, one observation I have heard over and over is everyone is saying that this is all in all hurting US businesses and US consumers at least as much as all others.
Yeah, true. I mean, we've seen what's happening to the dollar since this announcement was made. But I'm more curious at this time about, I mean, you said that shipping to the U.S. now has stopped, at least for Volkswagen. I can't imagine what that's doing to employment and individuals and small businesses who are in the value chain of these exports.
Yeah, that's exactly what we're seeing. I mean, everybody is reorganizing so the supply chains. Everybody knows that this is going to take a lot of time, and you can't even fathom that in the end, this is going to save anyone any money. And when it comes to companies, how they are affected by supply chains, I want to point to one example that I found really interesting, Ini, because it concerns two major companies in the US-EU comparison. They're the world's two largest plane makers. That would be Boeing, of course, in the US, and then Airbus here in Europe. The one who has a tremendous problem with the US new trade policy is, drumroll, Boeing. And here's why, Ini. Those planes are, of course, US made, but they're made from around 2,000 components that are sourced from 700 companies around half the globe. So Boeing will have to pay import tariffs on all those parts, and it can't just switch and make those components, of course, in the US. U.S. That, of course, was Trump's original idea of what the tariffs would lead to. But Boeing says to source these components from a new supplier would take years, not least, of course, because of the certification needed in the highly regulated aircraft sector. Also, Boeing sells 80% of their planes they're making outside the U.S., so they will also suffer from reciprocal tariffs on the way out. And all that, of course, will make Airbus planes now so much more attractive in the future.
Yeah, well, it seems a new normal is coming in global trade, and we don't know what the face would look like, but I guess in the coming months, if nothing changes, we would see that new face of trade globally. And I believe the sentiment is not different at the stock market. Even then in Europe, the red color seems to be everywhere.
Oh, yes, definitely, Ini. After yesterday's bloodbath, there's not much in today's market that makes you hope for any change. We're seeing losses again, steep losses in Frankfurt, with the DAX down another 2% on top of yesterday's 3%. So over these past 2 days, actually, we've lost half of that incredible rally that we had seen since December. Well, if you remember, I always said that this rally we'd recently seen was too good to be true. Now, the story behind it, obviously, is also more of this uncertainty. How will it all play out? There's angst, there is panic in the market. We've obviously seen the U.S. markets yesterday, and you just had another report right there out of the U.S. We're also seeing it in Asian markets today. We're seeing it in tech, and tech specifically for a good reason. U.S. tech stocks are among the biggest losers, and that has to do straight with the EU here. The EU saying that they might look at their tax deals as one form of retaliation. Google, Meta, Amazon, all these, they have long snuck by paying very low taxes. Now, if the EU ends up going after them, they will pay billions more in future. Investors obviously would punish U.S. tech stocks then even more, and there we go. However, for now, Ini, it seems we'll have to wait what steps are actually being announced over the next couple of days and weeks.
Yeah, Lars, well, a whole lot happening there to the market, to the stocks, to the bonds and all, but we're here, and we'll follow up on whatever happens. Thank you so much for sharing those information with us.
Yes, thank you, Ini.
All right, I don't know, maybe I should have wished Lars a tariff-free weekend, but it's the reality that we're living with at this time. Let's head to the crypto space and see how much impact this Trump tariff has done right there. But I see that today's color is a bit different, not red. Like yesterday, we see it's green for now, but the numbers aren't so different. So I guess it's just a little bit of movement between from what we had yesterday, but the sentiments remain the same. Of course, I don't think anybody can really escape it, but we see more of green this afternoon. Ethereum, however, is worse than it was yesterday. So we saw it at about 1,008, but for now we see it's 1,007. XRP is also green, but I mean, what's the number right there? Well, we have to live with this at this point, yes? But let's see some headlines from the crypto space. The United States Treasury Department has sanctioned 8 cryptocurrency wallet addresses linked to Russian crypto exchange. So sentiment between the United States and Russia, well, doesn't seem as good as before President Trump came, but well, we'll see. After President Trump had promised the world that he was going to bring peace between Russia and Ukraine, and we've seen that not really taking off. Perhaps that's changing the sentiment between them. Well, the United States Office of Foreign Assets Control sanctioned 8 crypto addresses that data from blockchain forensic firms, Chainalysis and TRM Labs are linked to organizations. So that's it. And there's also that the EU is fining X for Digital Service Act violation. That's from the EU, and that's the report is from New York Times. The European Union is gearing up to impose a fine of $1 billion on X. We know who owns X, and we know the role he's playing in all of this with Trump's administration. So you want to ask why now? I don't know. Well, they said there's a violation there. That's why the EU is finding $1 billion. So it might not be connected to Elon Musk or so, but Well, I'll just say what I see. And then there's also a major Solana unlock that has raised eyebrows across crypto space, and it involves $33.27 million worth of Solana that was sent to a centralized exchange, raising a whole lot of dust right there. It was unstaked, and so I guess investigation will be going on to share more information on this. And this is $33.27 million worth of Solana. I think the value in dollar is about $49.78 million. So it was unstaked, and that's a huge amount of money that we see there. Now let's take this conversation further with Emmanuel Jacobs. Is a tech and blockchain YouTuber. Hi, Emmanuel. Good afternoon. Welcome to the program.
Hi, good afternoon. Thank you for having me.
Great. So the bloodbath, is it over for crypto, at least connected to the tariff?
I wouldn't say it is over yet, because when it comes to tariff, the effect might not be immediately, but I believe in the long run, people might tend to, run to embrace cryptocurrencies, although cryptocurrencies like Bitcoin and others are kind of risky assets. So the fact that these tariffs are being increased is definitely going to be a good thing for Bitcoin in the long run. So I believe in a couple of months later, it might be bullish for Bitcoin and other cryptocurrencies.
You think so? Because investors are looking for a hedge at this time. Even gold is bleeding, but we haven't seen that much movement to crypto.
Yeah, there is a lot going on recently in the crypto space, but that is why I said that it might not be bullish for Bitcoin like right away. But I believe in the next couple of months, because I still believe that the bull market is not yet over, and I believe maybe sometime around maybe quarter four or so, the market might be quite bullish, in my own opinion, actually.
Well, thank you for clarifying that. That's your own opinion. So we also see that Tether is now the largest Bitcoin holder, having over 100,000 Bitcoin. Does this give us anything? Does this say anything about the stablecoin issuers' role in the market? Has it changed their status?
Okay, so I feel due to the fact that Tether is holding over 100,000 BTC, I believe stablecoin issuers are currently evolving, and they are getting to a point where they are kind of one of the biggest market movers. So it's kind of giving Bitcoin a lot of credibility, which will attract a lot of institutional investors to the cryptocurrency ecosystem. But at the same time, it might be risky, because the fact that they have a large number of Bitcoin, they might want to manipulate the market. I'm not so sure they might want to do that, but there is possibility that they could possibly manipulate the market. So on the positive note, I feel this is actually a good thing for cryptocurrencies and as well as other stablecoin issuers.
You know, we're looking for the next big thing in markets, not just crypto now, even in stock markets, in the midst of all of this. Do you think perhaps Tether could be somewhere in the middle of a major move in the market anytime soon?
Yes, there is possibility for that, because Bitcoin being kind of their reserve, I feel it is not something they are actually going to want to sell off anytime soon. And so the fact that they are holding over 100,000 BTC, this means that they have actually reduced the circulating supply of Bitcoin in the market. And you know what scarcity can do to the price of any commodity. Because if a particular commodity is scarce, there is possibility for the price to increase in the long run. So I feel it's actually a good thing for Bitcoin and the entire cryptocurrency market.
Okay, what about President Trump? Well, he seems he's ignored the crypto market now. He's busy with tariffs.
Oh, sorry, I didn't get that.
I said, what about President Trump? Do you see him doing or saying something that could move the market, even though these days it seems he doesn't have time for crypto? It's all about tariffs.
I watched one of his videos some weeks back when someone was asking him about the meme coin he launched, and he said he forgot about it, and so I feel he's kind of really busy, although he's someone that really do support the cryptocurrency market. So I'm kind of feeling that the fact that he's not maybe paying much attention to the cryptocurrency market at the moment doesn't mean that in the long run that he's not going to do something. And the involvement of Donald Trump in the market is actually kind of going to cause the crypto markets to be become a roller coaster actually. But in the long term, I think it is a good thing.
Emmanuel, you know, I can't get off what you said, that he said he's forgotten about the coin he created. I mean,
exactly.
Perhaps the crypto community should just leave President Trump alone to face. Oh, God. Well, thank you so much, Emmanuel Jacob, tech and blockchain YouTuber, for your time on the program.
All right. Thank you very much for having me.
All right, so that's it. I mean, imagine President Trump say he's forgotten about that coin that he created. Wow. Well, we'll see what happens next. There's still negotiations supposed to happen about the tariff up until Saturday. That's tomorrow. We'll see if President Trump is going to give a soft landing to any country. Of course, we'll bring it back to you on Monday, and we'll take conversations around that. But it's been a pleasure being on this side of the program all through the week. I hope to do it again with you next week, even though I'll see you tonight for the stock market report. Do have a restful weekend. Bye-bye.